Welcome back. Fitness company Peloton officially kicking off its IPO roadshow last night, pricing its shares between a range of $26 and $29, looking to raise as much as $1.2 billion in total. Joining us to discuss, Michael Kawamoto, research analyst at DA Davidson, who just initiated Peloton with a neutral rating, and Spencer McLeod, partner at G Squared, which is an investor in Peloton. Spencer, I'll start with you, a relatively recent investor in terms of the private funding round. When you invested, how did you value the stock? What particular multiples did you focus on?
Well, I think we focused a large part on the story, and what really drew us to Peloton is how well they're executing against the mind, body, soul megatrend, which is gaining momentum across not just the millennial demographics, but also the broader U.S. population. The second piece to the story that really resonated with us is we love products that are addictive and have a positive impact on the lives of their consumers. And in the case of Peloton, you not only have an enthusiastic consumer base, you really have an evangelistic consumer base that often will tell you about the business in the first 10 minutes of interacting with them if they're an owner of a Peloton cycle. And the third piece is we really look at Peloton in many respects as a new media brand. We think it's plausible that they can plug and play different offerings on their product suite in the same way Disney acquired Star Wars or other third-party content, and really allow their instructors to become, to some extent, celebrities.
So, Spencer, I get all that. So the valuations are relevant then?
No, the valuation's highly relevant. We just think there's a terrific growth story that goes along with all that. And I think given the fact they're actually seeing year-over-year accelerating growth with a nice margin profile, and you look at the customer unit economics, which is really where we focused our financial analysis, we think as you package that together, this is really kind of a price-to-sales story that will continue to be exciting to the public markets.
You know, Michael, I see that you have a rating of a neutral on this stock. Certainly it's popular right now, but we talk about fitness fads all the time. Do you think that Peloton can continue its growth rates that it's put up recently, or at some point is the next new thing just around the corner here?
Yeah, thanks for having me on. So, I mean, exercise trends are notoriously faddish, from, people dancing around in hot pants and call it jazzercising to P90X. And so it's going to be on Peloton to keep people on the platform by continuing to create, compelling content and introducing new modalities. So, if they can continue to do that, they should have a nice runway for growth. But, the lack of profitability here in the valuation was a little too much for me to get my head around to initiate with a buy rating.
Michael, the very high purchase price for a Peloton bike, I guess, is a positive in that it makes it less likely subscribers would then cancel their subscription once they've had that outlay. But does it also limit the growth profile in the years ahead? Are they almost at saturation in certain cities like New York?
Yeah, that was part of my analysis. And if you look at overall exercise bike and treadmill sales throughout the United States, Peloton is done a great job of taking very meaningful share, going from our calculations from 6% to 22% in the most recent year. And I do think that market saturation is a concern here. A lot of the tread and bike market is in that entry price point, and I don't know that they can go down and get that consumer. So it's definitely something to keep an eye on from a growth perspective over the next couple of years.